right, VIX hanging in there as stocks come under some pressure, but we are making a little push here into the close. Nate Peterson with us, Director of Derivatives Analysis at Schwab Center for Financial Research. Good to have you here into the bell. Nate, take me through the session. What do you see?
Well, first let's talk the VIX because, if you look at the term structure, it's roughly, we're 2021 right now. And if you go out further in time for the next 6 months or so, it's hanging around 19. What sticks out to me is when looking at the VIX is if you're an options trader, I wouldn't be surprised after we get past election day, you get this unknown known that is now known, then I wouldn't be surprised because of seasonality. Maybe you get some lift in November and December, like historically we generally do. I wouldn't be surprised to see that VIX come down. And so if you are an options trader and you're positioning yourself as such, have a Vega forecast for if you're positioning out in November and December. Having said that, anything can happen. Headline risk has been out there. The VIX could be going higher, but I said, absent any of that, then I think that I wouldn't be surprised to see the VIX, being around 15, 16 by the time we get to December. What sticks out to me, Oliver, though, is just basically we're not seeing the participation from the small caps. Price action has been lousy there over the past 2 weeks or so. But what does stick out is NVIDIA. And it's not just NVIDIA. Broadcom fresh all-time high yesterday. Palantir is right around an all-time high. It's at a 52-week high, but approaching its all-time high from 2021. And what that speaks to me is that the money flow is beginning to find its way back towards the usual suspects within AI and technology. And if NVIDIA does go up and make a new high, its intraday high is around 140, its closing high is around 135.75. We're right around there. But I think that would kind of send a signal to the market that there may be another leg up in the AI trade.
All right. And so far, that's been our reliable, of course, today, kind of keeping us in the fight. S&P's now within 20 bips. Yeah, pretty close, making a nice little pop here within 10 points. All right, so VIX still elevated. If we expect things to calm down, then we should expect VIX to come back down, to your point, to the average range. We do have earnings starting tomorrow with the banks. That's going to be important. How much growth do we need to see there to be satisfied, Nate?
Well, financials specifically, I was talking with Kevin Hinks about this on Fast Market. I mean, if you go back to the Barclays conference last month in early September and you looked at some of the commentary, the guidance, it was not bullish coming from the financials. Ally Financial, Goldman talking about their trading revenue being down. J.P. Morgan saying NII is too aggressive looking out. So I don't know if financials are trading near all-time highs, and they are important. They're an economic barometer. Generally, if the economy is doing good, we expect that sector to do good. But I'm not sure if that's the place where we're going to look for the earnings growth. We are going to get it from technology, healthcare, some of those other sectors, maybe more of some of the mid caps. If the small caps aren't going to participate, there is some wonkiness in some of the mega cap techs. Some of them look really good, like Meta, for example. Alphabet has its own issues. So maybe we start looking towards the mid-tier of the market capitalizations. And, FactSet, we've got, 4.2% is what we're looking for in Q3. But, Oliver, I think beyond that, it's really Q4. We got 14% they're projecting, and then 15% for 25. Those are subject to revisions, as we have seen. But this is really an earnings story with the S&P at a forward PE of 22.
Okay, like that. So we got to grow into it. But it's not like it's impossible, The valuation elevated, but it's not as extreme as it was during COVID, during the mania.
Right. And, I think the reason is because of the setup. It feels like that we're getting a strong economy that's very resilient. Look how resilient the economy was in the face of one of the fastest rate hiking cycles in history. And we potentially get the Fed on our side. Now, that might be called into question. We might have to revise our rate cut expectations. But it's really about, yes, the economy's strong. We've got easing at our back. The Fed's, on our side now. And with that in place, that should translate into EPS growth. And therefore, a 22 is not expensive right now.
All right. For perspective, the COVID highs, 33 trailing. Whew. Man, that was smoking hot. All right. Thanks, Nate.
Appreciate
the perspective. Good look on the big picture.